So thanks everyone for being here. We put together a really awesome panel here of experts that I think will certainly be very helpful for this upcoming year. And if you file an extension, maybe it'll even help you for the 2024 fiscal year as well. But it's great to see also from the panel that no one is ignoring bookkeeping, since it is an essential part of any business. And guess what? If you have a short-term rental, even if you only do it part-time or it's a side gig or your sister's side gig that you're helping out with and stuff, like, it's still a business, and treating it as such is super important. So I'm happy to introduce our panel today, and I'll let them give you their day, and then of course we'll jump into kind of the typical fashion that we have for these events with questions. And I guess just to give you a little bit of housekeeping here, if you have questions, if you want to ask them live, you're welcome to raise your digital hand. Let's see, did Zoom change where the digital hand is? Yes. So there's a little button that's called React. It's a little heart in the middle of the screen. Nope, that's not the right one. See, they moved that. It's recognize hand gestures, play chime for raised hands. Where the heck did they put is it under more now?
If you just click on
React and then raise hand.
On the little
React, raise hand. Okay, sorry.
Yeah.
Oh yeah, sorry. I was clicking on the little sorry thing. Yeah, okay, good. That's where it is still. So yeah, React, raise hand. That'll raise your digital hand. If you have it checked off, you can also do this, and it may recognize it. And then we can pull questions in live. You're also welcome to put them in chat, and then I will jump into them as the moderator to help answer them. If you didn't want to speak up, your mic's not working very well or whatever, it's all good. So first off, I'll introduce myself. My name's Anthony Rollo. I'm a board member at Host to Host, and we're very thankful for our panel to be here, and thankful for some of our attendees here and everyone else who's watching this in the future on YouTube and wherever else it gets broadcast across Host to Host platforms. And then I'm going to introduce the panelists today. So it's probably showing up on everyone's screen is a little differently, but I'll start off with Kim. And Kim is the founder of Back to Basics Bookkeeping, and I will let her talk about herself in a moment. The next I have Megan Carter, who is our brains behind Nerdy Keeper, and I'll let her explain more about the name of Nerdy Keeper and whom she primarily works with. And then we have Adam Hamilton, who is joining us from a software solution platform called REI Hub. And again, we're going to be jumping into a bunch of questions that we already have kind of at the ready, as well as tips, tricks, best practices that will be certainly very important as you look to continue to elevate your proper business practices. And I think having all these experts here today will be very rewarding for everyone who's watching this. So if I will pass the floor over to Kim to give her full introduction. And again, please stay on mute until you're called upon for anything from a questions and answers perspective. And we'll take it from there. So Kim, the floor is yours. Welcome.
Great, thanks, Anthony. Hello, everyone. I'm honored to be here today. I have spoken to this organization in the past, so it's nice to be back. And I see actually two familiar faces now, so that's kind of exciting. So my name is Kim Bowes. I am the owner of Back to Basics Bookkeeping Service. We do remote training, consulting, and bookkeeping for service-based businesses. And we just celebrated 18 years of being in business. So that's pretty exciting for us. We are, it's funny, it's kind of changed over the years, but I would say that doing books for hosts has become our niche. We actually have quite a few clients that we do short-term and long-term rentals for. And we love it. It's actually our favorite clients. So super happy to be here. We are a team of 5 of us. And we just celebrated our 23rd, I celebrated my 23rd tax season. So Um, I couldn't believe that when I kind of counted it up, and I said, I think I'm getting a little too old for this. It's always really stressful, even if you plan, even for us accounting people. So, an IRS government deadline over your head is a lot. So that's why we're here today to help you. I also wanted to share really quick. I am the founder and president of All Star Accounting Professionals, Inc. We are a nonprofit organization very similar to you guys, actually. We just do it for accountants. So we educate, refer, and support one another. And we've been going on for 13 years now. And it's just kind of our, I call it our therapy in the accounting world, which is great to have when you're a business owner. And I think that's it. Happy to be here.
Thank you so much. Really appreciate that. And I wasn't aware of your your organization as well. That for just accountants. That's really cool to know. Thank you.
Hey.
Thank you for being here. All right. So our next panelist, as I mentioned before, is Megan Carter from Nerdy Keeper. So Megan, the stage is yours.
All right. Yep. So I'm Megan. I'm a bookkeeper usually for women who run an online service-based business. So like coaches, copywriters, some hosts. I've got a couple random ones like a flight school, just, fun stuff. But basically I take the bookkeeping off their hands so they can focus on the stuff that they actually enjoy doing. So they can be in there working with their clients and not thinking about the back end. And I like to say like be the CEO of your business, not the accountant. So yeah, that's it. I've been doing this for nine years now. I originally started it so that I could eventually be a stay-at-home mom with my kids, but still, interact with some adults and just do some work that I really enjoy doing. So that's really paying off right now. So yeah.
Great. Well, really, really pleased to have you here. And welcome again. And then last but not least, we have Adam Hamilton from REI Hub. So Adam, stage is yours.
Yeah, thank you. So glad to be here chatting with you all today. I've got a slightly different background. I'm not a professional bookkeeper, but for the last 6 or 7 years, I've been co-founding and building REI Hub, REI for real estate investors. And we are an accounting software platform that is designed specifically for the property investment industry. So we found that there are lots of people in the United States who own investment properties. There are lots of people using inappropriate solutions, either spreadsheets when their businesses are too big, or generic accounting software meant for different types of businesses than the very unique kind of circumstances and needs that short-term rental hosts and long-term rental operators need. So my perspective is a little bit less in the nitty-gritty of an individual's books and trying to figure out all of the nuance to their specific situation and looking at things in a little bit more aggregate. How can we build pathways that makes this process easier for all of us? So I'm really excited to hear from Kim and Megan myself. I'm a very small scale landlord, but have been living and breathing in this real estate accounting world for a little while now. So excited to chat. I promise not to push REI Hub too much as we go through, but I'm sure it'll come up from time to time. So that's why.
Awesome. Appreciate that. Yeah, really good mix of people here today. So as I mentioned, we have a handful of kind of boilerplate questions that we'll start kind of kicking off with, and then I'll be checking the chat, and again, people as they have any pressing questions that they'd like to speak verbally, we'll ask you just to use that react button and raise your hand, and then we'll call upon you and get some of those pressing questions answered. So I'll throw out and I'll throw this out to Megan, and then everyone can kind of chime in as if they have different answers and want to kind of focus on different things. But what are really some of the common mistakes that you see hosts making with their bookkeeping. Because again, this is going to be, we want people to be educated, we want them to be able to make proper decisions on this. And there's a lot of people out there who have probably been doing things incorrectly for a while, and it's common. So kind of trying to tease those out, and we'll see if anyone in our audience right now can fess up and say, "Oh gosh, I've been doing that."
Yeah, one of the big ones I see is not separating out your full income value and your processing fees. So a lot of times, like you'll get that deposit from Airbnb and you'll say like, oh, this whole thing is income, but really it's X dollars of income minus X dollars of fees. And so you just want to make sure that you're actually seeing how much you're paying for those fees, because that's probably eye-opening on its own. But yeah, so like that $97 comes in, it's $100 of income, $3 of fees, and you want to be able to look at your P&L and see how that's really panning out. Yeah, and I'm sure the other guys have some good ones too. So
That's a valuable one. I'll just interject real quickly if it's okay. I know when this is probably, I feel like maybe the second year, but I know Airbnb started getting really vigilant about sending out 1099s, and then they're like, people are like, this doesn't match. I don't understand. And this is a prime example of where it wouldn't match up at all. And people are like curious, like, oh, do I have to put that amount? Do I put this amount? And
yeah, and if you end up putting that amount and not putting the related fees, then you're paying more in taxes than you should, because your income's gone up, even though really it hasn't.
Yeah, I'm sure the IRS will be happy to send that all back to you automatically.
Oh yeah.
Who else would like to answer with any of these common mistakes?
I can go ahead.
Thank you.
One of the ones that came to mind for me is a lot of times hosts will come to me and they'll use their personal account for all of their income and their expenses, and not have a separate bank account designated just for their rental property. So it's super important to have that separated. If you're using an accounting software now, I'm not sure about the REI Hub, but like QuickBooks Online, when you connect your bank account, it flows all of the transactions in. And if it has personal stuff in there, then it's a big mess. And you have to kind of divide it out. And it takes a lot of time, which obviously, if it takes a bookkeeper's time, it costs you a lot of money. So it's really important to keep it separate. You don't want the IRS to see your dirty laundry. I always say you don't want them to see your personal stuff. So just don't mix.
100% agree. That's the foundation of quality bookkeeping.
And just say, to add to that, especially if your business is an LLC, you're risking the protection of your LLC, because basically an LLC means if you sue me, you can only take the stuff that's in this LLC. But if you're commingling funds, that's piercing the corporate veil, and they're going to look at it and say, like, you're really not, this LLC really isn't separate from you. So now I can sue you and take everything. So it's scary and important.
Great point, Megan. It's like number one of like how to waste money on an LLC. Set it up, pay the extra tax fees, and then don't open an account for it. You're automatically setting yourself up in trouble there. Well, y'all highlighted the exact same first couple of things I wrote down. The first thing I wrote was commingling business and personal, and the second was net versus gross, which is what you were talking about, Megan. That's just the terms I like to talk about it in terms of like the IRS wants to see your gross expenses, your gross revenue, not just the net. We think about net because that's what we're going to get taxed on. That's what we care about. That's what we see in the deposit in the bank account. But it's really both of those numbers is what the IRS wants to see. It's going to be funny if you get to the end of the year and all you have on your Schedule E is a revenue number because you've included all your already netted out all those expenses. That's not going to go so well. The other two things that I see are very common mistakes is number one is repairs versus capital expenditures or fixed assets or whatever kind of parlance you use for that. But in general, this is one of the areas that a lot of people who are not in the accounting and bookkeeping world on a regular basis don't really think about, right? Because when money moves out of our bank accounts, our natural tendency is to say, okay, well, I spent this money, this is an expense. But that doesn't go very well if you're talking about larger projects, right? So the items where we are updating, improving, adapting, acquiring items, and properties, a big bathroom renovation. All of those things are going to need to be capitalized and depreciated over time, because the IRS says that this is where you are not just managing your business, but where you are improving your business. And if you are in the act of improving your business, that's something you need to capitalize and write down over years, and not just in the year in which it occurred. I've got another one, but let's hear Michelle's question.
Yeah, go ahead. Thanks, Adam.
Well, okay, so I have a couple questions. I'm going to be the one to be vulnerable and honest. So if I did mix, so I haven't even been open a year, and most of the expenses that are mixed were in the setup in the building of my Airbnb. So because I, hadn't really established the bank account and stuff when I first was getting started.
Yeah.
What are the things I have filed for an extension? So what are the things that I need to be aware of as I begin to unravel the mess when filing my taxes when they are commingled? And a lot of them will be capital expenses. There might be some things that I bought at Costco that were for the year or stuff like that, but mainly it's capital expenses.
So Megan, you want me to take this one?
Go for it. Yeah.
Okay. So this is, first of all, Michelle, you're not alone. This happens most of the time. So thank you for being vulnerable. We see kind of everything. And in fact, we've made our own mistakes. So please know that. When clients come to me, this is, like I said, very common. Typically, our first step is to get them into an accounting software. And the startup cost is actually one of the things that I also said was going to be a common mistake, because they tend to be on the personal side of your books because you were just beginning, right? You didn't have a separate bank account, and you're like, okay, now what do I do? I've got some in personal and I've got some in business. How do I get them in? Well, that's where kind of a bookkeeper can come in, because we can typically what I do, and I'm not sure what Megan does, but I have my clients actually take their personal statements, highlight the business transactions on them, and then scan them and send them on to me. And I just manually put them in with a journal entry. And then that way you for sure get your write-offs or your home improvements that you made, your startup costs get put in correctly into the accounting software. And then we can move forward correctly with the business bank account moving forward.
Cool. Thank you for that. Kind of a add-on question or follow-up. What about things like, Wi-Fi and like subscriptions or like landscapers that I pay? I already had those things set up, obviously, before my Airbnb. I know now I can deduct some of those costs, but those are paid they're like already set up on, automatic payments out of my personal account. Do I need to change that going forward, or what is best?
I would say if the entirety of that bill is for that property, I would change the payment. If you happen to be like renting a room in your personal home, then maybe you do a journal entry for a portion of it. But yeah, if the entire bill is for that property, I would go in and change the account that's paying for it.
Okay. So no, the entire bill would be for like my home and the property. So then.
Okay. In that case, then you would probably just go journal entry route every month. This is the utilities for Wi-Fi and
Okay.
And I probably would base that off of square footage. May depend on the utility, whether or not you'd go square footage, but come up with some kind of reasonable reason that you've decided on this percentage and use it consistently.
Okay.
Yeah, and that was what I was going to say too. Exactly what Megan said. Typically, a tax person will work with you on a percentage, and then they'll tell us bookkeepers, and then we'll create like a class, and we can track it in QuickBooks that way, or we can just create it by separate income account versus put owner's draw to all the personal piece of it, portion of percentage.
Okay.
Yeah.
Thank
Michelle, I heard the uncertainty at the beginning of that, but like Megan said, it's so normal. Or Kim said, everyone does it at the beginning. And when we talk about commingling personal and business funds as a major mistake, we're not talking about it and saying that that's going to cause an audit, that's going to cause a problem. We're not saying that the IRS is coming to get you. Now, if it's an LLC bank account, that's a bigger issue. But if it's just your personal bank account, The reason we say that is for the ease of use it's going to provide down the line. So the IRS does not care what bank account you paid for something out of, right? Even the liability issue with an LLC, that's a legal issue, not a tax or a financial issue. So the IRS doesn't care how you paid for it. They just care that you did. So the real risk that we run with a commingled bank account is not entering in all of our business related transactions, because when they get mixed in there with our personal ones, we can't tell if that Costco run was supplies to outfit the Airbnb for the first time or just restocking the house. So so you don't need to worry about having done anything wrong at this point. All you really need to do is have a very clear understanding of which of these transactions were personal, which of these transactions were business, and then it's going to set you right on the right path. And then we recommend getting that second business account set up just so that every time you're in it, you know, without having to think about it, this was a business expense, and that's the real value.
Yeah. Okay. No, thank you for that, because I wasn't sure what the scare was.
Oh, no. And mistakes happen too. Like I accidentally bought my dad's birthday present with business money last year.
Yeah.
So it happens. You just have to make sure you record it correctly. Like that was an owner's draw. That was me taking money out of the business. I just sent it to Amazon directly.
Got it. Thank you, guys.
I'm going to throw in there too something before we have Diana, who just raised her hand, ask a question. But don't forget the benefit of actually having a separate, literally having a separate account and like a whole silo. I mean, you have a checking account. I'm not a professional in this aspect, but I recommend to customers, guests, and not guests, but clientele of mine that I consult for, that they should have you know, a credit card, a checking account, maybe a savings account, and again, all in the organization, company's name that you've created to kind of keep it clean. But you're going to have advantages of, you know, you have a whole, you know, a different. It's not going to be your credit. It's going to be your company's credit, your business or LLC's credit. You know, at different points, you can sign up with the bonuses that you get. There's a lot of cool things, a lot of big benefits in that aspect. And at least now Apple Wallet holds several credit cards in there, even if you can't rename them. Gosh, that's really annoying. But anyway, just wanted to throw that out as a tip. And then Diana, you have a question with your hand up. So before we go on to another general question, I'd love to have you ask the panels.
Okay, I do have a question, and it's kind of an extension of Michelle's questions and situations. I'm currently trying to reorganize my mother's we started back in 1979 with an original bed and breakfast in San Francisco, right outside of San Francisco. Anyway, so over the years, it's we sold that. So then she got into the short-term rental for other properties and things like that. So I'm dealing with somebody who's very old school, in their 80s, who refuses to have a separate account because she's like, but when I buy paper towels from Costco, 2 of them are for my house. The rest of them go to the STR. And she says, I put a lot of things off on that, so I don't want to have a separate account. And so what she's been doing is every statement, every credit card, as you guys were explaining, we go through line item for every single thing that's been purchased. And yes, she then does a percentage, like, okay, well, this is for this or this is for that. And I'm now trying to wrap my head around how she's doing things and how I can streamline it into more of a an ethical way of doing it or an easier way going forward, because we're going to have to end up taking over everything, obviously, you know, and I don't even know where to begin with that. When I had my STRs, you know, I had my separate bank account. I had a spreadsheet. Yes, I didn't use a separate software, but you know, it was easy for me. And so anyways, I don't even know where to begin with all of this, I guess is what I'm saying, and how to help somebody who's in, you know, and that's why I'm trying to get into the host share and everything on that one account and get it off of this other program. And anyways, so yeah, what would be your suggestion for me to even take this and change it into the right way to do things?
The right way to do things depends on the person doing it, right? And there's always going to be a big, the person who's managing the property is always going to have a really big impact on how the bookkeeping is going to be done. So, I mean, we can make a very rational argument as to why there's a benefit to separating those accounts, but we can't forget the humans involved. And if somebody's been doing something the same way for almost 50 years, that is going to be difficult. I'd say a little bit of it depends on how much you want to convince her, to scare her straight, to put up with it for a couple of years until you're ready to fully make a transition. But I think that you've got to keep the human in mind, and that's a huge challenge, and I understand that. And I'll certainly let Kim and Megan chime in from there, but I just wanted to say that that's part of it, right? It's who's doing the work is going to impact how the work is being done.
Yeah.
I fear her liability. I fear the liability is what I do, and she's in California, and that's where our properties are there. And so anyways, yeah,
Diana, is she an LLC?
no.
Okay. So my suggestion, are you currently using an accounting software or a spreadsheet or?
She's not. She just keeps everything manually, and then she makes a list of everything. Her tax accountant gives her a spreadsheet or a worksheet, I guess. And so then we sit down and we go through every single bank statement that she does every month. She really does. She keeps up with everything, and she has receipts for every single thing.
Yeah.
And which is great. And so she freaks out because nowadays everything's done online and you don't always get receipts.
Right.
And
Right.
so those get printed out when we do get an invoice. But anyways, so she is on top of it as far as she's concerned, and I'm sitting there going, you are just teetering. It's just like one small crack in that iceberg. So
Well,
yeah, that's where I'm at right now.
Yeah, since she's still a sole proprietor, it's okay. And she is going through and separating it and figuring out where it goes, and she's keeping a receipt, so she has the documentation. So, and she is 80 years old, right? So I'm really impressed that she's doing that, actually. Like Adam said, I think it might just be you hold off until you take
necessary.
over that piece. Yeah, I really do. The only other option is to connect an account in a software, let it all flow through, and then put the personal stuff into draws.
And put the personal stuff into what? I'm
Into
sorry,
a draw account. A draw account.
Okay.
So it doesn't affect the business books at all. So so you could connect the account to an accounting software. It could flow in, and then you can go ahead and go through the transactions just like she does on a paper statement, but you do it electronically versus paper. So that would be a part you would have to do for her. And then you can put it to the appropriate categories, and then everything that's personal would go to owner's draw. That's how I would do it. But I don't know if you can convince her to do that. That's the hardest part.
Well, if I get everything set up and show her how simple it is and how less stressful at tax time it might be, then that's the thing. And then she sits there and literally crosses her fingers all year not to get audited. And I'm like, well, if
that's my suggestion. What about you, Megan? What do you think?
I mean, the only other thing I was thinking was that if you did set up a business account for her, like she could still do that same process of like the two of these Costco towels are mine, except she's just doing it over here on a business statement and saying like this little bit is personal. And so at least everything over there is at least a portion business wise and not like entirely personal. But again, she's 80. There's only so much you could probably convince her to change. But it is not, she hasn't gotten audited yet, so.
I wanted to throw in something that isn't directly related to the proper bookkeeping, but it's more of the appeal that you could make as a daughter to your mom. Ask for her, say, can you help me? This is going to help me if you allow me to do this. My parents are no longer with us now, but there were points where I realized I had to take over a lot of all the stuff that my mom, she taught me as a child religiously how to balance my checkbook every month, and I did that manually back in the day. So, I knew how to do all that stuff. I don't do that anymore, obviously, in the world that we're in, but I was very aware of it, and she continued on doing that until into her 80s as well. And when I told her, and this wasn't even for her business, but her personal stuff, I had to take it on and help her with it. I said, look, this is going to make it a lot easier if you allow me to do it this way. Would you do that for me? And that allowed her to kind of relinquish some of that, and we did it together for a while, and then she was happy with me just doing it, and she didn't have to do it anymore. And I gave it to her as a gift, essentially, and that she felt really good about. So I think from a human aspect, Diana, that might be a nice approach, and allow you to set it up where you'll be able to help her reduction of stress as well as yours, and be setting yourself up for success. With an expectation that you could take over everything more easily. So that's my take on it. The one point that is bookkeeping related, and I'd love to be double checked on this, but my rule of thumb is when I'm buying something that is, could be slightly personal and business personal mix, would be whatever the majority is.
Yeah.
I start there and then peel off. So it's like if it's 12 rolls of paper towels and you're taking 2, that's the minority. So I would charge it on a business card and then remove the 20% or whatever percentage it is of a personal, versus the other way around. That's just me.
If only everyone were so meticulous.
Yeah, really.
Down to the roll of paper.
That's
Right.
impressive.
I actually used 3 extra from the roll because it was a half, sheets, and you can turn it. No. Seriously, I know some people, yeah, it sounds like she's doing really good stuff, Diana, and you just need to make it a way that will help you help her. That's my view on it.
That's exactly it. And I think with my new properties that are coming up, I'm trying to wrap my head around taking that over and adding them with mine so that we can do the whole thing.
Oh, that's a good idea. Yeah.
Yeah.
And if you're doing, this is something I'll ask as a question, if it's okay too, is the way, we manage, we have 10 total properties, but 7 are short-term, 2 are long-term, and 1 we live in. So I've set them up, not the personal one is the one we live in is our personal one, obviously, and that's kind of just personal cards and personal accounts. But every other property has literally its own silo. And if you get, with credit cards and things like that, you can see it's like I've got a stack of them, and I don't carry them around anymore because I have most of my phone now. But as far as there are sometimes, and this I found this with REI Hub, actually, it was kind of a really neat way to split it out. But like if you're splitting it across a category, so I have STR, LTR, and so if I have a business expense and it's something that, let's just say, trying to think of an expense that goes across all, it's not individual.
REI Hub software subscription, baby.
Yeah, well, duh, there you go. The subscription cost. Thank you. That goes for all my properties, and it's for both LTR and STR. So I guess that would be like the full umbrella. And before I would just be like, oh, you know what? This year I'm going to let this business, this individual property take it on, and the next year I move it, and inevitably that just doesn't work very well, and it's not the right way to do it, I'm sure. Yeah, I forgot what my question was going to be.
Yeah, I think for sure it's important to have like for like your general kind of costs that happen that can be split for all your properties. It is important to do that in your software that you're using. So you can, in QuickBooks, they call it classes. And so you can create classes, you can create a general class and then each property's class, and then figure out that percentage for each transaction. Another thing I was going to bring out really quick before we move on is another thing that I'm seeing more and more of over these years of doing bookkeeping is people not saving receipts, not saving statements, check images, proof of income like 1099s. It's just not happening anymore because of us becoming this paperless society. But you know, the IRS does not see paperless. So it is super important to have this kind of documentation. And what I'm finding, and I don't know about Megan and Adam, but everybody's kind of part way. Like they've got some receipts over in their emails. They got some receipts on their phone saved as an image. They have, it's in multiple places. And so I encourage you all to get it in one place. And the banks do get rid of statements and check images after a certain length of time. And they charge a ton of money to get that information if you ever are audited and need that information for whatever reason. So I highly encourage you all to create a somewhat electronic filing system and try to get it all in one place. I personally use Google Drive. You can use OneDrive, you can use Dropbox. Just pick something that works for you and then put bank statements in there, put your tax documents in there, put receipts in there. Super important.
And I'll point out too, some of the softwares also have the ability to attach
Yes.
receipts to transactions. So like I personally attach my receipts to my transactions in QuickBooks. So whether that's a picture of the receipt, which you can do with the QuickBooks app, which is really cool, or even just you can email in your receipts. So if you get like an email from a software, you can just forward it to QuickBooks and then you can attach it, which is really handy. So that's another method, at least like transaction specific, that you can keep receipts for. And those paper receipts, the ink will fade, and the IRS will not accept that as the reason for not having a receipt.
Yeah, and a bank statement, like a credit card statement, does not count as a receipt.
That's true.
Yes.
How's that work for digital, so like solely digital? So if I pay with like Apple Pay, which is my easiest way to do it most these days, and you don't, there's no paper that's coming out. You get a receipt of sorts, but it's not much better from a layperson's perspective than what's shown on a credit card statement. So I'm curious how you may or may not know how they look at that kind of stuff, because you know, if I go to Starbucks and I get a coffee, and you know, it's a business expense for whatever, you know, for talking business, whatever it is, like I have it in, like I'll get the receipt in my Starbucks app or something, but like I'm not taking a paper receipt and a picture of it and things like that. It's like,
yeah, something like the Starbucks one, I think, yeah, you have to go find the receipt, and like you could take a screenshot of it and send it in to your software or email it or something. But yeah, some of those you have to go dig for. But yeah, the little
Amazon's the
email that you get from Apple wouldn't probably be enough information. And it's all going to depend on the vendor too. Like, is Starbucks going to send you a receipt? Is the random meal place going to email you something? So yeah, it's kind of vendor specific, unfortunately.
But there's not like there's not a super strong definition of a receipt, right? A receipt does not have to be on paper. It does not have to be formatted in a certain way. Just like I can write a valid check on a tissue if I can get my account number in there without ripping it. So the big thing there is that it's coming from the vendor, because it's the original transaction where the funds are moving between you and the business or the service or the payment. That is the transaction that matters, and that's across all of our things here. Like I deal with people sometimes who they make a purchase and then they move money to pay for the purchase, and then they try and use the movement of their money from their savings account to their banking account and say, well, there's my receipt, that was for this other thing. And we say, no, that was you moving money from your right hand into your left hand. That's not a valid receipt. It's the record that comes from when the money moves between you and the service or the company or the provider.
Mhm. And the IRS does only require receipts over $75. So I mean, I would still do all of your receipts, but if you happen to lose a $5 Starbucks receipt, like it's not the end of the world.
Right.
Yeah.
Yeah.
How long has it been $75 though? I mean, like, what do you get for $75?
That's
I
a
mean,
good question.
right?
It's
Like,
a valid
I mean,
question.
I mean, I could send $75 at Starbucks, maybe not just for myself, but like, if I have like two, colleague and like two other, like, you're spending $75. I'm sorry.
Yeah.
It's like,
That's absolutely true. I don't know why I said $5 at Starbucks because nobody can spend $5 at Starbucks.
you might be able to get one thing for like a cake pop, but that's about it.
Yes.
And for most-
how do you say cake pop is a business expense?
Yeah, I'd also just go ahead and throw in there, for most rental property investors, Starbucks is not an allowable business expense. Anthony's talking about some specific circumstances in which he's meeting with people, he's doing some deals, there's some stuff in there that's doing it, but just in the day-to-day operation, in the maintenance and management of your properties, your coffee run on your way out to your rental in order to clean it up does not count as a business expense. So
No.
be careful
Fair
about
point.
It does not. But if you do meet with a client at Starbucks, you can write that off, but it goes as meals, which is a 50%
50%.
rise versus 100%.
But you should still put the 100% in your bookkeeping
Yes.
records.
Yes.
It's just when it comes to tax time, it's only you only get
They'll
to count
take
half of
50. There you go.
it.
Nice.
Don't
Good
get
plug.
yourself in a 25% situation by having it early.
Ugh, good
Yeah.
call. It looks like Michelle has another question. Before she comes off, I will say this, and you guys can tell me if I'm doing it wrong, but we sometimes send like a Starbucks card to a guest if something got screwed up. So like I actually have some auto language on this, right? It's like, oh, sorry about that. Here's a treat on us. I treat that as an advertising expense because
Yeah, better client gift or
and that's 100%. Yeah. So okay, cool.
Yep.
All right, good. Well, there's my Starbucks expense experience.
But client gift, the IRS, if it's my understanding, I was told they only allow you to do $25, up to $25. So I get around it by putting it to advertising and promotion.
Yeah, I
That's
do.
the point.
And again, well, I do like, so I do a $5, even though again, I should probably raise this now too, but I did like a $5 per guest. So if we have, 4 guests, that's $20. But if it's 10 guests, it's $50. We just try to say we're treating everyone because you had the inconvenience, whatever. But yeah, we put it as advertising versus gift.
And it's $25 per person. So in that case, even if you spent 50, you're still sending it to, well,
right.
either it's so hard to document that you're sending it to 10 people, but like in theory, that's still $5 per person. So you could
Totally.
do the whole thing. But yeah, marketing just avoids the whole conversation.
Yeah. Thank you. All right, Michelle, you have your hand up with what?
Well, I just had a kind of a follow-up tack-on question to the meals expense. So as long as if I'm networking or I'm meeting with a client, then I can deduct 50%. Is that right? And is there anything additional I need to keep track of as far as like who is at the meeting or a purpose or anything like that?
I think if you were to be audited, it would be good to have like, I met with so-and-so, we discussed X. It doesn't have to be like paragraphs of stuff, just some bullet points of what you discussed. And you could probably put that in the transaction memo or just write it on the receipt. But yeah, you would want to be able to tell them, substantiate why it's a business expense.
Okay.
Yeah.
Cool. Thank you.
Awesome. Yeah, and I liked the ideas that other people had as far as using the tools and using online storage for that, because it's yeah, this stuff. I mean, the days of everyone except Diana's mother having a big folder of receipts is kind of behind us, and I think that's I think Adam's point of there not being a kind of a clear, definite. It must be a piece of paper. It must be 1.5 inches by 4, like that kind of thing. And CVS receipt is like 20 feet long, right? Like, so that's good to kind of hear as well, because even if they're not keeping up with the $75 has been many years and kind of is the minimum that you would want to keep a receipt for, I still think some of the evolution of that is at least helpful. shifting a little bit more, if the panelists would talk a little more about some kind of overlooked deductions or expenses that could be forgotten about. This is an opportunity now for all the hosts that are on this call to understand things that, especially if they haven't done last year's taxes, but like what is it that you see commonly forgotten about? So I wouldn't call it a mistake, I mean, per se, but it's something that hosts in particular may, you've noticed that they're forgetting about it, and you remind them, and then they put it in there, and boom, that's could be several $100,000, whatever it is, from a deductions perspective.
Yeah. I mean, mine, I was just going to put in there business mileage, I think is one that a lot of hosts forget. It's 70 cents per mile, and that can really add up, you guys. So if you do use QuickBooks Online, you do get a mileage tracker for free with your subscription. And it's super easy to use. So it provides you a report. You can run like monthly or quarterly or annually. So you can prove, send it to your tax person, or if you do your own taxes, keep it in the record. So you have documentation, but it can really add up. And I realized when I started doing books for hosts that was something that a lot of people you guys tend to not think of you as a business, and you are a business. So you do get that business mileage.
Super helpful there. That's one of those that you kind of, you forget when you're going places. And also, some of the more you talked about, I'm not as familiar with QuickBooks since I don't use them. I kind of don't like Intuit, but
Sure.
the tracking of that, I mean, so you could look up on a map like how long it takes you to get from your home to the property, but sometimes I don't know, depending on where you live, like it could take you an extra 20 miles because you're following Waze or whatever, and traffic and stuff like that, and it's $14.
Yeah.
Or whatever. I mean, either way, I mean, it's money that you could be counting properly if you were tracking it, I'd say more accurately in that aspect. Wait, can I ask about this, just tying into that as well? And Michelle's hand is still up, so she may have another question, but what about tolls? Is that blended into the 70? Or do is that separately paid?
It's an expense.
It's
So
an
it can go
expense.
with, I can go with parking and tolls expense.
Got it.
Mhm.
Good to know. Yeah, I don't think I've actually been doing that well. Boom. Value. Thank you. Michelle, did you have another question? And again, if anyone else, any other panelists wanted to answer any more specifics about
I did.
anything that they've forgotten about potentially other hosts, but go ahead, Michelle.
I did. I have a bit of, this is probably a strange question for this group, but I have two businesses. And for one of my businesses, I actually drive clients and I have additional insurance and things for that. Is the mileage still the same if the client is with you, or is it fully expendable? How do I say that?
So my read, and I'll certainly if Kim or Megan feel differently, but there's not a substantial change there. That doesn't impact it, because the 70 cents per mile, the 68% per mile, depending what tax year you're in, is designed to be the full cost of operating the vehicle.
Okay.
The nuance is that we actually have a choice between methods of recovering costs for mileage and vehicle usage.
Yeah.
By far the most common, by far the easiest, by far the lowest lift is tracking per mile and using the IRS designated rate. But there is an allowable option of the total expenses method, is what it's called, where you are actually, putting in all of the expenses related to the cost of the vehicle and prorating versus personal versus business use. So someone who has 100% of like a designated business vehicle is more likely to go in that route, because then they can write off oil changes and lease payments and things along those lines. But for someone who basically does not have a fully dedicated vehicle, my personal recommendation is just go the mileage rate, just for simplicity's sake. But you know, someone like a realtor or someone who does an Uber driver, for example, is likely to go in that other direction simply so that they can be even more confident that they are capturing 100% of their vehicle-related costs.
Gotcha. Yeah. Okay. Thank you.
That's super helpful. That was a great one, Adam. Thank you. Angela, you have a question up. Is it the same question you had here? Or you want to ask it live? You're welcome to ask it live, or I was just going to ask for you, but.
No, this is a different question.
Oh,
I can
go
ask
with
the other
both
real
then.
fast since it's short. How long do we need to keep receipts? Is it still 7 years? Yeah. Okay. So the bigger question is, and I think I've actually asked some of you this before already, but I really, really still struggle with, especially this year, looking more closely at my tax documents and managing our tax filing, is that we get the 1099s from Airbnb that reports our gross income, right? But I use Stessa accounting software, which just pulls from my bank account. So it pulls my payout from Airbnb. How do I rectify this? It's so confusing to me. And I heard somebody mention gross expenses earlier, which was really interesting. That was an interesting, term to use, which makes sense to me. But how do I track that and report it? Because Airbnb is going to be reporting that gross, right? So how do I even differentiate between gross expenses and then I don't know, what do you call the other expenses of your business? Net expenses? I don't know. But yeah, if somebody can speak to that, because I've been struggling with this and I'm still struggling with it.
Does that software allow you to split a transaction into multiple things? So I think you just have to go in and split it and say like, okay, I actually charged them $100 per night, and then Airbnb took $3, which we all know they took more than that. And then that nets to that transaction, so that when your statements pull up, you see the whole $100 and then the $3.
Well, but what Stessa is pulling is my net. So they would be, they're loading in the 97. So
yeah, so you would go in and say it's $100 and it's minus $3.
So I would actually change the amount to be the gross, and then include that gross expense, and then that will end up equaling what actually hit my checking.
Yeah, so you're going in and saying this $97 transaction is made up of $100 of sales and $3 of fee, negative $3 of fees, so that it nets to 97 and matches.
And the only way to do that is manually.
Yeah, you'd have to go into that transaction and split it. Because it's the same concept if you were to go in and say like, I went to Costco and half of this is food and half of this is supplies. You're just doing it with a number that's higher than the net and then a negative to bring you back to your 97.
Yeah, so I would go into the $97 amount that loads into Stessa. I would change that to 100, then add in what would it be, like platform fees or something?
Yeah, as a minus
platform fees, and then it'll report my
hopefully it will let you do that all in one transaction. Yeah.
It lets you edit the amount, and it lets you split.
Yeah.
Okay.
I agree that's the way to do it on a transaction by transaction basis with a tool like Stessa. I'd also say that, especially if you're looking back at 2024 in aggregate, you could also make a potential adjusting journal entry for the entire year. And that's going to save you a lot of time versus trying to do, 16 deposits a month or whatever, however many.
Yes, absolutely.
And so what would you classify? So if you just did one adjustment, so you just figure out what the difference is between the 1099 that Airbnb sends and what your total payout from Airbnb is, and that difference is the adjustment, and that would just be the amount, and it would be classified as OTA fees or whatever.
I would be careful to not just use the 1099 amount, because sometimes Airbnb collects fees that are not revenues to you.
Correct.
Because you could be short-term rental occupancy taxes, or there could be other things going on. So 1099 just means what they've processed, not what is technically your revenue. So I would look at the Airbnb reporting to get a better sense of that. And you all have to forgive me, I'm going to put a plug in here, but in facing this problem from a software perspective, the way that REI Hub decided to deal with it was actually to build an uploader for the Airbnb and VRBO payment downloads, payout statement summaries is what they're called. So basically, you can, those come out of Airbnb in a CSV, and we give you the ability to upload those so that then we're capturing kind of from the horse's mouth directly all of those revenues, all of those expenses, all of those resolutions or adjustments on a per reservation basis. And we basically book those into a clearing account called Airbnb or Vrbo to capture all those net incomes, revenues, and expenses. And then we book the deposit in the bank account as a transfer from the clearing account to the bank account. And that can kind of, I mean, there's still manual work involved because Airbnb does not expose their API publicly. We can't just like sync that in automatically in the same way we can like a bank account's transactions. But it is, especially if you're dealing at volume, it is a tremendously more efficient way than trying to adjust every single transaction that you have on an ongoing basis.
Yeah, and what we do as bookkeepers is we typically do it at the end of the year. So we take the Airbnb summary report that you can pull, and they actually provide it. Now they have this beautiful button that says 2024, whatever year, and you can click it. It opens up and it shows you your gross amount you made by property, and then all of the expenses, and then your net amount. So that's what we actually adjust with.
Okay, so we don't have to necessarily worry about our stuff matching the 1099K from Airbnb.
No. As long
Not
as you're
exactly.
reporting the income that comes in your bank account.
Yeah.
Yeah.
I just say, like ballpark is different than exactly.
Yeah.
We also work with a lot of long-term rental owners, and then, if they're using a third-party payment processor or rent collection platform, they're also reporting 1099Ks now. But in that environment, you also have things like big chunky deposits, right? If you get a security deposit, that's going to be a part of your 1099K that's going to be reported to the IRS, but that is not revenue, right? So that's just the key distinction to keep in mind, and that can really freak people out because this is new rules, right? Anything that's new is scary, and the IRS has added some things in there. So it doesn't need to match exactly, but you should do a double check if you're showing half the revenues your 1099K shows. You should do some digging and make sure you know why there's a disparity.
Okay. Thank
Can
you.
you guys talk about the advantages or disadvantages to doing some of this reconciliation per stay, per month, per quarter, or per year? So some of it, Adam, you gave the example of the uploader, which is a tool we thought was really great for you guys since we just moved over to you. And that's, getting in. So yes, there's work that has to be done once a period. Now, again, that period could be literally every stay. I'm pulling down, the stay from this date to this date, 4 nights, pull it in, because that would adjust that line kind of individually. I could do it monthly or quarterly or annually. What would be best practices, and what would be the advantages or disadvantages to one doing it immediately or short term or long term?
There's a constant balance in bookkeeping between effort and knowledge, right? And a lot of it comes down to the individual. How much do you prize business intelligence? How much do you prize the information that your bookkeeping is providing to you? Because remember, bookkeeping is keeping the score. It's not just for tax time. It also tells us vital information about our business. But are you paying attention? Do you care? Is it just, okay, I've got enough money in the bank account, so I'm good? Or are you an analytical person who wants to dive into it? But generally speaking, something like Airbnb, if you're a frequent short-term rental host, I recommend a monthly basis for uploading a statement and making sure that those are good. Quarterly is certainly fine as well. And I'm not going to tell somebody that says, hey, I only keep my books for tax time. I don't care what the numbers say year round. Okay, fine, do it once a year. That's fine. And if that's the only reason you're keeping your books is to keep the IRS happy, then that's fine. But I would just argue that you're missing out on a lot of insight, and you're also not going to make your life any easier that one time a year. I think it's better to spread it out a little bit.
Yeah, I agree with Adam. Monthly is, I think, ideal. A good time to reconcile your books or to kind of check in on your receipts. I know I try to tell my clients, maybe take Monday as your admin day and scan in your receipts so they don't get piled up. But what happens is if you go more than a month, you don't have that fresh mindset of what happened the previous month. And it's amazing how much you can forget, right? And what reconciling does is people say, oh, well, the software now just automatically does it for me. But they don't realize the software is trying to be smart, right? But it's still a computer, you guys. It has to have somebody managing it, telling it where to go, because it thinks maybe one thing, but it could be another thing. So it catches errors, reconciling catches your errors. It also catches things that maybe got duplicated by mistake, things that shouldn't be there. And people don't realize that either. And so I can't tell you how much fraud I have caught by reconciling my clients' books monthly. So there are so many people trying to get into our accounts nowadays. It's very common, unfortunately. But if you are not on top of it, they start small. They start with a tiny little amount, and then they kind of go from there. And I can't tell you how many times, my process is if I have a question on my client's monthly books, is we send the questions every month to them and say, look, what is this transaction? It doesn't look familiar. I'm unsure where to post it. And then my client will say, Kim, I don't know what that is. And then I'll say, you need to call your bank. So fraud is the hugest reason.
That's huge. That's huge.
Yeah.
That I had that happen where I wasn't doing it every month, and I saw something like 6 months back. I'm like, why is there and it was a large amount actually too. Thankfully American Express was able to figure it out and refund us, but there had been like a transfer to something. And I was like, what is going on?
Yeah.
And but yeah, that kind of was a bit of more of a wake-up call for me to be like, okay, I really don't like doing this, but
Yeah.
it's kind of it's an essential. It becomes even more difficult without a software solution of some sort, which is why I've gone around and tried to figure out the best one for our businesses. But it's yeah, the aggregate view for me across everything was one of those things that was super helpful in looking at all these transactions and things like that. So that's where I think the software and that kind of visibility is key.
Yeah.
But good call out on the fraud part. I'm being conscious of time. We've probably got about 20 minutes left. I'm glad there have been questions kind of coming up throughout. I'll throw another one out there to everyone. So we talked a little bit about, touched on audits and stuff, and the 7-year rule. And that's also when, as I understand, that's when like your bank actually will start. Someone mentioned this too, like we'll start deleting / not making available to you easily or for no money your statements. So it kind of coincides with I don't need to worry about it anymore, maybe. But if you had it somewhere, it's nice too. I know I went back into the shed of my childhood home and discovered I had bank account statements from like 1980 when I had like my first checking account. But I don't need those anymore. Those can be shredded. And I actually have on my calendar a scan and shred once a month. Where all the stuff that comes in physical mail still, which I've tried to tame, I do shred and scan as necessary. But audits, are there any red flags out there, particularly for short-term rental hosts that you've seen? And again, I can't imagine that you've been through a ton of audits, hopefully none, but still, if any common things that you might want to throw out there that might be advice to really be very sensitive around when it comes to expenses and management of your books regarding avoiding audits or being prepared for them.
I don't do a ton with taxes, so I'll just throw out that the IRS does kind of notice if you are continually losing money every single year, they could determine that your business is a hobby, and that could be something that they're going to start digging into. I think the law originated around, like, I don't know, the example they always gave us in accounting school was like horses, right? Like people pretend that they're making money, but really it's just a hobby. And so like they're losing money every year. And so then that triggers the IRS. So I would say, and obviously spend what you need to spend on your business, but like if you've got an exorbitant amount of expenses every year that are overtaking your income, that could potentially get you into an audit situation at some point.
Yeah, and to piggyback that with Megan, I don't do taxes either, but I know the categories like miscellaneous, uncategorized, as put as write-offs, those are going to be questioned. You should never have a miscellaneous or an uncategorized expense. So super important to put it to the correct categories. Those categories are called chart of accounts, and it's like the foundation of your business. And you know, they're not set in stone. They continually change. But there's definitely ones that you should not have on there. And those are definitely the ones. The other piece that we really haven't talked about today is 1099s. And those lovely subcontractors, like your cleaning people, your landscaping people, your repair and maintenance type people. They all need a 1099 at the end of the year, depending on different factors. And I can't tell you how many clients come to me and they don't even know what a 1099 is. And so that could potentially be a red flag as well. If you are audited. Now, I have been through a couple audits with my clients, and that is the one area they always get people, always. So people say, oh, Kim, I've never heard of somebody getting audited and getting deemed with 1099. And I'm like, well, I have, unfortunately. So if you don't know what 1099s are, or a W-9 form, a W-9 form is just like an informational piece from the IRS that a subcontractor needs to complete. It's for anything that's $600 or more. If it was paid with a credit card, you do not have to 1099 them. If it's paid with PayPal or Square, you do not have to 1099 them. If it's paid with check or a personal Venmo, you do. But if that company is a corporation, you do not. So there's all these kind of rules and regulations and exceptions. And I'm going to tell you, they're complicated for me. And I've been doing this for 20 some years. So I can't even imagine what you guys go through. So that's why I do a lot of 1099 processing for people who aren't even my clients. They just come to me just for 1099 purposes because they're like, you just need to help me with this piece, you know, because it's complicated. Unfortunately, a lot of the IRS stuff is complicated. So if you have contractors, get a W-9 form completed, whether you know you need to 1099 them or not, to be prepared. And those 1099s are due January 31st after the year ends. There is softwares that help you with those. I personally use Track 1099. They do not charge you unless you use their forms. So it's great because in the state of Oregon, you have to not only report to the IRS, you also have to report to the state, and they will do both for you for a fee. And that's really small. Like, I think it's a total of like $5 for each one or something. Very small and doable. But it is the gross amount that you pay them for the labor. So make sure you realize who your 1099s are at the end of the year. And if you don't know how to figure that, find somebody that does.
In terms of, I'm sorry.
Love that tip. Sorry, no, go ahead, Adam. I was just thumbs up on that tip there for Track 2.
And I was just going to give my quick answer before we get to Michelle's question of red flags and stuff. There's a lot of, I'm not familiar with exactly what triggers stuff, right? None of us work for the IRS. But earlier we were talking about, you know, the payment processors, Airbnb, reporting income to the government, right? One thing that trips up some people, in my experience, is the nature of cash basis accounting, which is what most rental property investors use, as opposed to what most large scale businesses use, which is the accrual method. Cash basis means that we recognize transactions when they occur, when money changes hands, not necessarily when the money is for, right? Now, for most things, that's not a big deal, right? Because, you know, you pay for something, it happens, you're good to go. But as short-term rental hosts, sometimes we collect money for reservations very far in the future. And if you're in a seasonal location, you've got a ski condo or a lake house, you might book out really far in advance. And that means you might take a 50% deposit on a stay that's not going to happen for 9 months. And in your head, you might be thinking, well, this is for next summer. This is 2026 income, not 2025 income. But if you're filing in cash basis, and the vast majority of you probably are, that's not true. That is revenue received in the year it was earned, even if the stay has not occurred yet. And don't worry, you know, you have to report it in the year you receive it. If they cancel it and you have to refund it, well, then you can issue a refund and you can reduce the balance of your rent revenue account, right? You can say, well, I didn't actually get this rent. But if that's a particular circumstance you find yourself in, just be aware, if you're getting the money in this tax year, in this calendar year, you need to report it in this calendar year, even if the funds are not for this calendar. Seems like that makes sense to people. So let's go to Michelle's question. Sorry, Anthony.
No, that was spot on. I appreciate that. That's I think certainly helpful for a lot of people as they're thinking about this. I always say that people, even, you know, it's particularly important for hosts where, like, cancellation policies, you know, you book, you know, months out in advance. And I always say to people, you when someone books, you're like, yeah, I got a booking, it's great. It's like they're not locked until they've hit your cancellation window. And even then, it's still, you know, you could 50% or whatever you've decided as that cancellation amount. They're really just a warm lead at that point, and treat them as such. I recommend that. But in an accounting and bookkeeping perspective, that's an important note if you're filing your books in a cash basis versus accrual. So thanks. Michelle,
Yes.
your hand up for a question. Yes,
Yeah.
please.
I'm okay. Yeah, I thought I was on mute. I'm going back to the 1099s. So you said $600 or more. So for instance, like with my landscapers, I already had them before I had my Airbnb, and I just pay them via Zelle once a month. But now a percentage of that, of course, is going. I was gonna book that against the Airbnb property because it is about a third of my property. So for the landscaping costs. So I did not issue a 1099 by January 31st and have yet to do my taxes for last because I just got an extension. So does that mean I can't write that off then for this last year?
You can, and you can still go back and do your 1099, even if it's late. Even if it's late.
Oh, okay.
But you would
Yeah.
not include the personal portion. So it would just be
Right.
the portion related to your business. And it's
Right.
$600 for the year. It's not $600 one time. So it's a rolling total.
Right. No, I got that part. Yeah. 600 for the year. So anything over 600 for the year. Okay.
But
And
you want to get a W.
If it's an incorporated company, like Kim said earlier, you know, if it's, you know, Trees Are Us, like that's probably a corporation. There's a decent that's a corporation, and it's a different story in that ballgame. If it's a guy with a truck that you're giving cash or Zelle to, then yeah, it's a different.
And Zelle, so over Zelle, I do have to do the 1099. Is that what I heard? And did you say with check you don't, or what did you say?
You do.
You do.
With
Okay.
credit cards, you do not.
Credit cards, you do not. Okay.
Anytime
they
it's
issue what's
going
called-
to a, sorry,
Go
go
ahead.
ahead. I was just gonna say, if it goes to a third party processor like Square or Stripe or like somebody else who's processing it is going to send you a 1099K, that's when you don't need to. But a bank that's dealing with like Zells or checks or cash or stuff, like there's nobody tracking that and
Okay.
sending you anything.
Okay. Good to know. And what was the
You
name?
always,
What was the name of the tool you mentioned? Track.
Oh,
1099.
track1099.com.
Track1099.com.
Yeah, so you always start, Michelle, with a W-9 form. You can get a blank one and download it right from the IRS website and
Okay.
have them complete that first. That's your first step. And
Okay.
that will tell you what kind of entity they are.
I see. Okay.
Yeah, so if they're S or a C corp, you do not have to 1099 them, even if it's over 600.
No, it's a guy with a crew and a truck.
Yeah.
Okay, thank you.
You're welcome.
I just wanted to throw out there that 1099 is now, or maybe always has been, owned by a company called Avalara, which we use for some of our tax liabilities with
tax.
short-term rental tax collection, and at least in Tennessee, we use them. But yeah, I use Track 1099. What's really helpful too is you're probably going to continue to use some of these vendors over the course of the years that you're in operations. It kind of saves all that stuff for you, so you kind of just you don't even need to ask for it every year. You don't need to have a new W-9 unless they've changed something. And sometimes I found there's pushback. Oh, I don't want to give you that information. They're like, I'm like, I need your EIN and your address and your name. Like, I mean, not too much. They're like, well, I only use my social security number and I don't want that to get lost. And you're like, all right, well, sure, we get it. But like, that's part of a business transaction. I actually had someone who was like, look, I'll charge you $599 because I don't want to have to deal with that paperwork stuff. And I was like, all right, I clearly don't want to ever deal with you again because we're going to go over that dollar amount. But like, all right, dude, you do you, I'm trying to do it the right
Way
way.
to self-limit your business potential.
Yeah. I mean,
Let me give up
it
thousands
is what it
of
is,
dollars
right?
of work so that I don't have to get.
Yeah,
Right. Yeah, I'll save you. I'll charge you $100 less and not have to worry about the paperwork. I don't want to do the paperwork either, so fine, great, cool, bye.
But I don't.
And so if you use, oh, go ahead.
ahead.
No, I was gonna say if you use like Turno for your cleaning stuff, you don't need to worry about it, right? Because it's going through that third party. Is that right?
Is there,
I seem to remember when I looked into Turo, it's been a few years, but I believe they were a corporation. But you would have to confirm that with the W-9 form.
Oh wait, so
you're
I'm
talking
talking
about Turno for short-term rental. Yeah, if they're, I'm quite sure they're an Inc. I don't use them,
Yeah,
but like if
I
I'm
think
quite
they
sure they're an
were.
Inc.,
Yeah.
then you wouldn't have to worry about it, is what it sounds
right,
like.
because they're charging me fees and stuff. Like it's all so okay. So yeah, that's what my assumption was, but I wanted to check it. Thank you.
The reason I did have my hand raised, and this is a question that I've always been a little curious about, but kind of never pushed. Some cleaners charge tax on top of the service to us, and are they supposed to be charged like sales tax? Are they supposed to be doing that?
So I'm in Oregon, so there is no sales tax here, so I'm not the right person to ask on that one.
Yeah.
Okay.
Megan, do you know?
My guess would be no, but it probably depends on your state and whether or not they tax services.
Okay.
Or the state that they are in and whether or not that state taxes services.
Got it. It's New York. I
my
feel like
gut
they tax
is-
everything.
Yeah.
I can't say I've heard of that in particular, but that's the sort of question if I got from a user, I'd say consult a financial professional in your locality.
Yeah.
Or their
Nice
locality.
statement. Yeah, it's true. It's true. Yeah, I mean, I've kind of been like, whatever, you can charge. I'm paying you this amount. I think actually she's probably undercharging us. She's been a great cleaning manager for years. So I'm like, okay, it's not an exact number anymore. It's this plus tax. And I'm like, that's your raise and you want to treat it as such, I still 1099 her at the end of the year and it's all good, but
Okay.
thanks. I'll ask some other tax professionals for that.
Yeah. Sorry.
No
I
worries.
would
No
just
worries.
quickly pop back to the W-9s. Get yourself an EIN. It's free. You can sign up online in 5 minutes. It costs nothing. You can sign up for like 20 a day, I think, which I wouldn't recommend, but you can do that. Do not send your social security number to strangers on the internet.
Yeah.
I had a client where I did 1099s for her, and I like 7 out of the 8 people had given her like their social security number. So here I am, somebody they have no idea who I am, dealing with their social security numbers. So get yourself an EIN. It's cheap and easy and free.
Free and easy, yeah. Oh,
Yeah.
one thing I'll throw out there about EINs and such. if you're getting it as a sole proprietor, you can only get one.
Mhm.
You
That's true.
can't get more than one. You cannot have more than one sole proprietorship.
So don't
I
lose
learned
it.
this. I learned this when I was I got one, and I needed to change the name because our county or whatever was like, you can't use the word team inside a sole proprietorship. I was like, okay, so if I change the name, it'll be fine. They're like, yes. So I had to do that, and I thought I'd just get another number. And they're like, no, you have a sole proprietorship number. It's the same number, and we'll just change the name for you. And I'm like, it's actual months and paperwork with, and faxes from the IRS to deal with that. You can only get one, but you can get as many EINs as you want. I've got plenty. We're almost at time, so I want to make sure if anyone has any pressing questions before we kind of go around back into our panel and blast off with some final tips and closing thoughts. But if you have a question, now's the time to raise your hand again. No more hands. Oh wait, Charity, is that a finger? I see you have a finger. Well, you got you
I got a
go ahead. You
question.
go
I
ahead
got
and
a-
then send us. And
Thank
then send us
you.
into the wrap.
All right. So I have a question from someone who could not make it today, but sent in their question. So they are considering renting a car along with their short-term rental, so that if they made their car available to guests, they could make money and have something to drive when they're home because they're thinking of not living there. Obviously, there's liability concerns and significant insurance concerns. But from a bookkeeping perspective, it would appear that the cost of maintaining that car and purchasing that car, potentially, all of that would be included as a business expense if it were used primarily for the rental itself. Is that correct? Okay.
I think it depends. So I'm not a tax person, but vehicles are kind of a little bit different there, and it depends on a lot of variables as to whether you should book it in your books or not. So
Okay.
I would have them consult their tax person.
Okay.
Yeah.
Charity, I don't know if you saw my comment.
Just saw
the
that.
first- Not turn, Turo is what I meant to type. But yeah, because we've thought about that as well, doing the
Okay.
same thing. Buying a car for like on the business, but setting it up on the Turo app
Huh.
and then giving people the link that are staying here if they would
I
like,
see.
you know what I mean?
And having the sort of facilitating the insurance be handled by the middle manager. That makes sense.
That's all
Yeah.
done through Turo. Yeah, I mean,
Yeah.
that's what it's for. So
Your
that
vehicle.
would be
You
easier.
would not just want to include that with your Airbnb. That should be a separate agreement.
Exactly.
Mm.
Yeah.
But from a bookkeeping perspective, if you're buying the vehicle for that use, I certainly agree with Kim. Always consult your tax professional, but that would be a capitalizable expenditure, right? That's not something that you're going to just write off. If you
No.
purchase the
Right.
vehicle, you're going to need to capitalize and depreciate that, just as if you had just put a new roof on your house, right? You're improving your business, you're expanding your offerings.
Okay.
Unless you were leasing the vehicle explicitly for that reason. So, if you did not purchase the vehicle, but you were leasing it, my understanding, not as your financial professional, but my understanding is that you would be able to deduct the cost of the
The
lease.
lead. Yes.
Oh, yeah, that's another way to do it. Yeah.
She might
Yes.
have legal issues with, can you lease a leased vehicle? You might have
That
to
is
look
also a
into
great
that.
question. Yes.
That's a good question. Yeah.
Probably not.
I'm sure the
Wow.
people that you leased it from would not appreciate that.
Yeah,
That's true.
Never know.
Yeah.
I know like Uber and like if you wanted to be an Uber driver, Lyft driver, like they've had programs where you lease from them and then you use that vehicle to run your Uber or Lyft business.
True, but in
friends
that
have-
But
case, you're
somebody else
still
isn't
in
driving
it.
it.
Yeah.
Yeah.
Yeah, no,
You're
yeah,
still
fair enough, fair
responsible.
enough.
Yeah. Yeah.
Look at us
Wow. So
pretending to
many
be
cool
legal people.
It's like an onion, isn't it? And it's like
Yeah.
peeling away. I love it. Thank you guys. So
no
much
doubt.
complexity to all of this.
Yeah. Okay, so I know we're a little bit over. If we wanted to just give our panelists an opportunity to any closing thoughts. I'll start with Adam, who's
Yeah,
on my right here.
Something that almost came up in the very first question of the day, in terms of some common mistakes or just kind of gotchas. And that's loans and loan payments.
Mm.
And a lot of people don't always think about loans in quite the right way. And it's particularly important for our industry because rental property investors have potentially the highest proportion of financing impact on their rental property books. You know, the corner store down the street, the professional services firm, maybe they've got an SBA loan, but if you're in property investment, you have a loan on every single property. And that means that the impact of getting it right is magnified, and the impact of getting it wrong is magnified, right? So just the quick overview there is make sure that you understand that your loan payment is not a monolith. It's 3 different transactions in a trench coat. You've got a principal repayment, an interest expense, and if applicable, an escrow transfer. And each of those things needs to be treated in its own unique fashion. Principal repayment is not deductible. You're moving money from and reducing the balance of an asset and a liability on your balance sheet when you're paying a loan down. Your interest expense is 100% deductible. The amount of your escrow payment is not deductible, but the expenses that it pays for are. So if you've got that monthly payment, make sure you're not entirely writing it off as an expense. That could potentially be an audit flag. If your mortgage interest category on your Schedule E is way too big and you're writing off your entire mortgage payment, that could cause an issue.
Yeah.
But also make sure with those escrow payments, if you have an escrowed loan, those do not hit your operating bank account. Those are being paid out of the mortgage servicer's escrow account that they're maintaining on your behalf. And those are still allowable, huge deductions that you need to make sure you're entering in your property taxes and property insurance, but you need to be doing it with the actual expenses when it's paid out of escrow and not the monthly estimates, which are your mortgage servicer's best guess at what the combined amount of your property tax and insurance needs to be over 12 months. So that's my I'm going to die on this hill. I'm going to tell everybody about loans. Gotta get right.
Strong close, Adam.
Yeah.
Thank you. Kim, you're up next.
Yeah, I just wanted to throw out there, it's really important, you guys, to have a savings and put 20 to 30% of your gross earnings into savings ongoing throughout the year. That will really help you at tax time, so you don't have a big surprise. Of course, your tax person, if you do have one, will really help guide you with that. And so it can change over time, but that's a good start. And then the last thing I'm going to say is us bookkeepers, we're not scary. A lot of people are really kind of scared to reach out to us. I offer a 30-minute free discovery call through Zoom. So if you have any questions, you can always reach out to me. And I know a ton of bookkeepers through my networking organization. So if I'm not the right fit, there's a lot of others that I can refer you to. But I will say a bookkeeper is kind of like your guide and your help. And so make sure you get somebody that you trust and feel comfortable with because you're dealing with your money.
Thank you so much. Really appreciate that.
Thanks for having me.
Yeah, of course. Megan, what are your closing thoughts?
Just to throw out on Kim's there, also don't be embarrassed. We have seen everything. We have seen all kinds. You are not the worst. You have not made the worst mistake or the dumbest mistake. Like, we're not here to judge you. And if you have a bookkeeper that judges you, you should get a different bookkeeper.
Yeah.
Yeah. And then for my own thing, I would just say, keep up with your books. It's so much easier if you're doing things consistently. Like if you're dealing with 3 receipts a week, is so much easier than sitting down and dealing with 100 things at one time. So like Kim talked about admin Monday. Sometimes I call it finance Friday, just whatever it is that helps you get in there and just like categorize the transactions and get the receipts, and like 10-minute blocks are so much easier than when we sit down for 4 hours and deal with this.
Yeah.
Or
You
just
mean
hand it off to
4/14?
somebody else.
4/14
Yes.
isn't the date that everyone should have on their calendar to do something?
Yes, please don't contact your bookkeeper or your tax accountant on 4/14 and say, oh my God, please help. Because you can keep up with it. I have faith.
Awesome. Well, thank you guys. I want to thank the panel so much for all of the great content today and really good conversation. And I know we had a lot of cool questions in here. I learned some things along the way, which I love. It's part of every day of life is learning. So really appreciate everyone's time today. And I look forward to seeing everyone else at another Host to Host event. If you're not a member of the of Host to Host already, I know because we have some people here who are members and aren't. We have a really inexpensive way to become a member, and you get to meet other cool people that are part of hosts, not only in Portland, which is where Host to Host was founded, but all around the world. I'm personally based in New York. I'm currently in California right now, but nonetheless, Host to Host is such a great organization, and you can be a part of it, and we wouldn't be able to exist without the very small lift of your annual donation, which is what, I don't even know what it is, charity now, $60, something like that.
Yeah, 75.
75. There you go. It's just at that threshold of what you want to save a receipt for, and you can actually write this
It
off as
is.
an
It's a
educational
business
expense.
expense. It is.
Yes,
It
yes.
is. It
We are a
is.
not-for-profit, but we're not a
Absolutely.
charity. So again,
That's
no
right.
tax and
That's
bookkeeping
right.
stuff. But it is
Yeah.
a business expense, and you will get a receipt. So you can write that
Yeah.
full $75 off. But
Absolutely.
hopefully you'll get a lot of value beyond these wonderful webinars that we have here.